Starting now. Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 311 for September 13th, 2021. We are recording this at 12 p.m. Eastern Time, an hour early than normal today. My name is David Kosmeter. I'm the creator of TimingResearch.com, and I am broadcasting from Denver, Colorado today. And you should be seeing my screen right now. So I'm going to share charts throughout the episode based on everything we talk about. So today I've arranged for Leslie Jouflas of Trading Live Online to join us, as well as Simon Klein of TradeSmartForex.com and Sonny Harris of MoneyMentor.com. And the Option Professor of OptionProfessor.com is back to moderate. So I'm going to go ahead and turn it over to him.
Okay. And we got three great guests today, and the markets obviously are at a very big point after the pullback we had on Friday. Nice little rally in the morning here. Now we're fading a bit. So it'll be very interesting to hear what our guests are going to say the rest of the month is going to go with. But more importantly, what is Q4 going to look like? Because I think right now that's where we have to keep our eyes. Let's start out with Simon. Simon, just a quick background on yourself and what's going on at your company.
Okay. Hi, Jim.
Hi.
Everyone else. Great to be here again. I have been trading, I guess, since 2005. I started out my professional life at Credit Suisse. In Credit Suisse, it was financial products and in both London and New York. And then I kind of went my own way. And Trade Smart is a trading education business, and we focus on teaching you how to read the market professionally and also how to run a successful trading business, which includes how to develop your own trading plan and strategies which fit your personality and lifestyle. So what I've found more recently is working more one-on-one with traders that have been trading 20, 30, 40 years without sustained success. They may have gone through periods of success. So what I'm doing now is working with them and getting them back on track, and also work with people like complete beginners and everywhere in between as well. So, but most recently, which has been very interesting for me, is to work with people who have been trading a lot longer than I have. So we also at TradeSmart, we have a live trading room we run every day. We prepare on Sunday and we trade live Monday to Thursday. And we also have an online training program, which will take you through everything I just mentioned, from how to read the market professionally using candlesticks alone, no need for any indicators. And the framework and process, the framework you need to have in place in order to trade successfully, trading plan, trading log, and trading journal, and the process you need to go through. So it takes you step by step through what you need to do to run a successful trading business, no matter how you're trading, no matter what market you're trading, no matter what strategies you're using, no matter what your trading plan is. So that's basically
it all comes back to the discipline factor, and whether you're just starting out or you've been doing it a long time. Sometimes we get sloppy with our discipline, and then that's where the problems get in.
Yeah, this is true, but you need to know what you're doing first to have have a plan to be disciplined. People, it was kind of interesting because I found people saying, I've got a lot of discipline, but they don't have a trading plan. So you can't be disciplined without having a plan. Yeah, impossible.
No doubt about that. Hey, Leslie, little background on yourself. I think I saw that you were speaking in front of the Denver Trading Group. I did that many years ago with Ron Rossway. Is he still over there?
He is. Yes, he is. He reached out recently, and we arranged a date of, I think, September 23rd. This will be a webinar, so I won't be there in person this time.
Right.
But we'll be doing it as a webinar. There's a great group that they have there. The last time I was there several years ago, hit it on a snow day in early spring. And I set the record for the longest presentation. We were there for 7 hours, I think, that day. But we had fun. We had such a great time.
Yeah.
So
they're a great group. They're knowledgeable and everything else. Yeah.
Yeah. So I'll keep it below 7 hours for the webinar.
I hope so.
But yeah, I've been in the market since the late 1990s, over 20 years, almost 25 years now. I am a chartered market technician. I hold that CMT designation. I've got some books published. I wrote a book called Trade What You See, How to Profit from Pattern Recognition with Larry Pesavento. I'm sure many of your listeners will know Larry. He really introduced Fibonacci ratios with the pattern recognition to us. And I also teach traders and work with them. I agree with Simon 100%. The trading plan is really, really important. It's what guides us through uncertainty in the markets, which is present every day, every minute that you're in the markets. It's uncertain. And so your trade plan, it has to be tested. You have to have a method for testing your trade plan. I believe what's really important for traders is I work with a scope of traders like Simon, newer traders and very seasoned traders that have had a hard time finding consistency. But a lot of it is understanding and learning how you're making money and losing money. You have to be able to specifically identify those two things, and the trading plan is going to help. It's going to help to do that. And then within that, then there's the emotional side. And so I work with traders and I hook up where there are issues in their trading. I follow their trades. I mean, step by step with them. I evaluate every single chart and setup with them. And so we work on those two things. I'm not a big believer in the word discipline actually in the markets. I think that's a very, very hard structured work. I think we have to have flexibility and understand and have a way to systematically evaluate the outcomes of our trades and combine that with our emotions.
Yeah. Yeah, the flexibility can be part of a discipline. Discipline doesn't have to be a rigid thing. The word discipline in emotes a little bit of a word like rigid, but a flexible plan could also be part of a discipline, right?
I think so. Yeah, I think that the word discipline is something that traders, like, they're striving for this thing called discipline, and I think it creates too much of a mental barrier.
Yeah, no, I agree with that. Yeah. Hey, Sonny, you have been around since the beginning of time on this investment thing. So obviously you bring an awful lot of experience and knowledge here, and you have your own indicators that you've created because you're a math background type person. But for people who are not familiar with you, could you just, quick background on yourself?
Sure. Thank you, Simon, for telling everybody I'm ancient. I mean, sorry, Jim. Yes, I've been trading for 40 years. I started in 1981, and I have primarily focused on the S&P 500. So these days I trade the E-mini, and I am a mathematician. I have 3 degrees in math and 1 in photography. And I am not strictly disciplined. I have some intuition that goes with my indicator I call sunny bands. And I have another one that's my dynamic moving average that I use to pinpoint entries and exits, and moneymentor.com. Oh, and I write a free newsletter every Sunday night called Sunny Side of the Street.
And at the end of the broadcast, all you guys will be able to tell the listeners how to get a hold of you and get the additional information. But let's get into the markets right now. We have a couple of standard questions we ask on a Monday, so let's get them out of the way. The first one is regarding the S&P 500. We opened today at a higher level of 4474, and we're now in the 4450s, I guess. Went up to around 4492. So from the opening 4474, where do you think the market between now and Friday on a best guess basis might be ending up on Friday? Starting out in the same order, Simon, what do you think?
Okay, I'm looking at the E-minis. So the number, we're at 4450 at the moment. Yeah.
Sure.
So I'm looking at that's my view on the S&P 500. I think it's highly likely we may be going down to 4,400, well, 4,400.
Okay. And your confidence level in that would be?
I'd probably say maybe more than 50%, just over 50%.
Yeah, more likely than not.
Yeah.
Leslie, what is your feeling between now and Friday as far as where we might be going?
Well, I think just looking at the charts, I mean, I never know what the market's going to do. So, but looking at the charts and based on some of the levels and some of the internals that I look at, I think I agree with Simon. I think we can see a test down around 4,400 and possibly 43.50. We see that the price is sitting on a parallel channel, upward trending channel line is sitting right on the center of the internal trend line right now. And if it breaks that, which is right going to be just a bit below 44.40 and continues down, then I think we're going to see at least 4,400 tested.
Mm-hmm. Yeah, the future is trading at a discount to the cash, huh? Because SPX is the one I was referring to as far as what the price is right now. But
I'm looking at the futures.
okay, so let's so you're we got two faders, and what are we talking with Sunny? What is your indicators indicating?
I'm not so sure. It seems recently we're buying back into the weakness here. You know, as soon as it goes down, people jump on it and buy things. So if David, can you draw a trend line across those bottom pad, the bottoms, the 1, 2, 3 bottoms, or 2, and I don't draw trend lines on apps. But see there, look at that. Pull it down a little bit. That wouldn't surprise me if it bounced off of that. Yeah.
Are you looking at the are you looking at the VIX at all, Sonny? Because I noticed the VIX is like has been just a little bit above 20, and that's kind of a key area because obviously if it goes 24, 25, then obviously Simon and Leslie are going to get their wish. But if it goes the other way and it fades from here, then obviously what you're indicating that we could be near a low would be something as well, huh?
Yeah, I'm not expecting a crash yet. I'm still waiting for, I don't know, October 13th or something like that.
I got you. That you, in other words, you think the month of October is where the rain may come?
I kind of do, yeah.
Yeah. Yeah, there are some people who think that this month may still have a big rally because of the end of Q3 and front running the earnings that are going to come out from Q3. And then, of course, in October, which is always a dodgy month, maybe some of the clouds will go at that point. But yeah, I think it's going to be exciting. Okay, what's your confidence level that we might be near the low here, Sonny? Like a little bit better than 50-50?
I would say so.
Yeah. All right, let's look behind the curtain on what you guys are really thinking, maybe a little longer term, as far as what things you are looking at that may affect the prices looking forward. You know, any fundamental or technical things, Simon, that you're seeing that you're going to say, okay, this could be the parameters in the very short term, but maybe going into Q4, we may see this.
So I'm a completely technical trader, even though I did start out my trading career on the fundamental side as well.
Okay.
Like fundamental and technical, but I moved completely to the technical side. Technical side, I mean the ability to read charts very, very well, just using the candlesticks, nothing else, no indicators. And I found that if you remove all indicators and you focus on price alone, hence the term price action, you can become very sensitive to price movements. So I have a methodology that I use to read the markets based on trend, pivot analysis on multiple timeframes, based on supply and demand, and based on something called price direction, which if you learn what price direction analysis is, you can literally, you don't need to know anything else about Japanese candlesticks apart from to do this one thing. You don't need to understand all the different patterns, the, reversal patterns or anything. You just need to know one thing. So I use that to analyze the markets on multiple timeframes, and it tells me exactly, what the market's doing. So much like if you're driving a car, you can read the road conditions by having a look outside the window, obviously onto the road, and see what's going on. Is it raining? Is it sunny? Am I in a pedestrian zone? Am I on the Autobahn in Germany, for example? Which lane am I in? How fast can I go? What's going on around me? And then trading accordingly. So if you understand the environment in which you're trading in, then you can adjust yourself, and you have to be able to understand and pick up on changes. So that's what my kind of way of trading or analyzing the market does. So if I look at the monthly chart, for example, we're still in an uptrend. On the weekly chart, we're still in an uptrend. On the daily chart, we broke the uptrend. So we're having a pullback. Now, the trend is still intact on the weekly and monthly. So this is just a viable pullback for now, unless the trend changes or breaks on the weekly and then potentially on the monthly. So again, any moves down may get bought in this environment. The market hasn't capitulated to the upside. It hasn't, it's not in an, it's not, suddenly shot off to the upside and that's the top. This may not be the top. It may be on the short term, we're likely to have a move down that we're having now this week so far. Yeah. But that may pick up again to the upside once we hit. I mean, as long as we remain above, and I'm looking at the weekly chart, as long as we remain above 43, 47, for example, 43, 47, 75, then we're still in a weekly uptrend the way I read the trend. So this move down may still get bought.
Mm-hmm.
But small time frame at the moment, we're moving to the downside.
Yeah. Well, many of the analysts are thinking, or many of the ones that I'm listening to or get information from are really thinking the end of the month is really where, if it is going to have a turn, it would be happening more closely to that time frame. Yeah. With regards to Leslie, any fundamental or technical things behind your opinions, not only for the next week, obviously, but going into Q4?
Yeah, if you could show the daily chart of the S&P 500 going back to, maybe at least, January, last December, January, you can spread out just a little bit more. And if you look at the corrections that have taken place in the last year, we haven't really, like, I'm going back to January of this year, and we had a correction to the downside there that was, short-lived, just a few days. And that was, I think, just a little over 200 points. And then there was another little correction from February down into the early part of March. That one was a little bit bigger, but these corrections have been very, very similar in the size of the correction. We really haven't seen anything over, I think, about 300 points. That was the February correction. And so I think what is going to be key is when we start to see a price move to the downside that is exceeding the last sizes of those corrections is going to be significant. And the lower trend lines that I'm using, they've been, I wish I could put my chart up for you, but they've been really working beautifully for the support and the resistance areas. And if some of these lower, I have a couple of them drawn, if the trend line down around just about where David just mentioned, right around that 43.5-ish area, if that breaks, there's another extended lower trend line just above, right around the 4,300 area. So I think the 4,300 area is going to be kind of a key area. That's going to be a bit of an extension of the size of corrections that we've seen. But if that breaks, then I think we'll see a bigger correction to the downside. But I do think that this is just sort of a normal, right now, it's looking like a normal pullback in what we have been seeing on the chart that you have displayed right now. One thing that I am watching really closely is the RSI. The RSI not only can be used for overbought, oversold areas, but it can also be used, this is a lot of constant Brown work, but it works beautifully, is it can identify changes between bullish markets and bearish markets. And so I'm watching the intraday charts already started a couple to a few weeks ago, started showing a process that they were changing from bullish to bearish. And so now I'm watching that process out on the daily chart to see if it extends to the daily chart. Right now, the RSI is sort of right down at the low end of the bullish range. So it's still holding the bullish range. But if we do get, as Sunny is saying, a kind of a move to the upside, I don't think we're going to new highs yet. But if we do get a bounce to the upside, that 4,500 or just above it, I think it's going to be good resistance. Then as it comes back down, if the RSI starts to break the lower end of its bullish range, then
Mhm.
we'll most likely see a larger correction. But if
Yeah.
it holds it, then we're just in a normal pullback.
Yeah, because like you were saying, in the last 4 months since May, each month has had a very sharp pullback, a very short-lived.
And
And
very
basically,
similar
you're
in
saying
size.
you're kind of saying that right now it really just looks like a little more of the same of that. But if we were to go down more than that 3 or 4% that the every month we've seen, then that would be a red flag. And then,
Yeah,
of course,
right.
if your RSI starts breaking 50 or whatever the number you come up with, then that would be another red flag.
Yeah, usually for the S&P, the lower end of the bullish range for the RSI is usually right around 37-ish to 40-ish.
Okay.
And so if it starts to break that to the downside, then we've switched ranges from
Hmm.
bullish to bearish. And actually, I'm going to be at the Denver Trading Group for the webinar. If anybody wants to sign up for that, I'm going to be talking about what that process is with the RSI of bullish to bearish and bearish to bullish
Sure.
ranges, and using specific trade setups with it to show you how you can use that.
Yeah, I definitely believe there's a correlation, and it's part of the soup that I drink as well. With regards to
Only soup.
yeah, you know how it is. You put
It
your
is not
ingredients
Kool-Aid.
in and hope none of it's arsenic, right? Sonny, what are you thinking here as far as behind the curtain, as far as not only like the next week, but let's start talking about Q4 and what you're thinking might be happening a little further down the road.
Well, somewhere in there, we're going to have and I agree with Leslie. These are just normal corrections. You can just see it hump and hump and hump all the way up. It's just like little mountains of
Yeah.
activity that go up and then back down again.
Yep.
And I still do think we're going to have a more sizable correction. Maybe I'm thinking 21%, because of course that's a Fibonacci number, but I'm thinking that's what we're going to see before Q4 is over. And
So you
as
you
far
would be any rally or whatever, you'd be kind of cautious and maybe either do some activities of trimming or hedging with the collars or married puts or something, whatever you do to protect yourself a little bit.
Well, I just go long and short. I don't trade options, but I
Yeah.
do. I have a long-term portfolio that I have my stocks in,
Right.
and I hold those for who knows how long. You know, it
Sure.
depends on the market.
Right.
But then I trade intraday on a 1-minute/5-minute chart intraday on the E-mini.
Right.
So I don't really care what the long term looks like.
Right. So you have a portfolio of that you're just riding things out up and down all
Well,
the time.
I did
Yeah.
liquidate most of it 2 weeks ago when I thought they were going to have this little downturn that we're having,
Right.
which was good. So that I'm flat the stocks right at the moment, and we'll get back in as soon as I see it. Well, I use my Sunny Bands indicator, so as soon as it comes through the DMA midline, I'm long again.
Then one of the numbers that I've been seeing is around 45.10 on the S&P. Is that an area where any of you guys think is kind of important? If we could start closing above 45.10, it might be an indicator that we're back on the race again.
I think that because 4,500 is a natural number. You know, it's just one of those. It's not even, especially. It's just a nice integer.
Right.
And I think that 4,500, when we break above that, then I'm going to think about going back in.
Yeah. That's I was kind of thinking the same thing. It's always nicer to be on a train that's going north when you want to go north, rather than being in a stalled position hoping it's going to go north, right?
Absolutely.
Yeah. All right. Well, look, there's a lot of different sectors out there. Well, let's talk about it if you want. Each one of your approaches to the market. Simon, are you doing mostly, would you say, shorter term trading, maybe day or swing, or what type of trading are you involved in, do you think?
All sorts. I go from short-term day trading to swing trading, holding a few days a week, and then to long-term positions as well.
Okay.
So the whole lot. It depends what the market's, again, the longer term trades don't set up every day. So when they do set up, you want to get on board and ride them, especially when you get in at the beginning of the move.
I don't know if you guys look at this, but I'm going to throw this question out because this is somewhat important. The tug of war between value and growth. And I don't know if you guys even look at the markets in that way, but the value is kind of dependent a little bit about the interest rates rising a bit. So the, margins on some of these banks, et cetera, like the financials, materials, and industrials, they're kind of your value area. And then your growth is your semiconductors, technology, consumer discretionary, cloud, cybersecurity. So looking at two different formats, growth and value, starting out with Simon, looking in Q4 and beyond, do you think one area or the other is a better place to be, or?
I have no idea.
Okay, no opinion.
No opinion. I don't know.
And
I kind of don't look at the market like that.
I understand. Leslie, do you see anything there? Do you look at those things?
Yeah, I'm, sure. The material sector, I've been seeing in the material sector some interesting looking charts kind of forming in the last few weeks that are looking like they're forming some bullish types of setups. Just last week, I did a segment for stockcharts.com, their daily 5 segment that's on their YouTube channel. And I presented 3 setups in the energy market. Their XEL, the ETF, was one of them. SLB, Schlumberger was another one, and Halliburton. They all had what are called Gartley buy patterns on them. And those are currently moving to the upside, but I think some of the energy sector had been just sort of beaten down for a while, kind of ready for a bounce. We'll have to see how far this move can move to the upside. But I do think some things in the materials sector are looking kind of interesting.
Sure. Sonny, I know you are, again, you have a technical way of looking at it, so you could put macadamia nuts into your system and you could figure out where you think the prices are going. But do you feel any affinity to either value or growth, or that's not on your radar?
It's not really on my radar. I mean, I'm always looking for, well, I hold value stocks in my long-term portfolio and I trade the growth stocks more. Even though I pretty much liquidated a couple weeks ago, I'm still holding Tesla because I ascribed to Kathy Wood's forecast of 4,000 on Tesla. So I'm just hanging on.
Yeah, you wouldn't want to sell something at 700 or whatever if you thought it was going to $4,000, right?
No, I'm not going to touch it. I'm just going to hold on that one for a while.
All right. Well, Leslie did talk about one thing that I think is kind of important right now, and that is the energy markets, because as she was saying, it had a nice rally and then it pulled back and now it's having a rally. So that 1, 2, 3 formation, this could be the most aggressive move to the upside. The guy over at Goldman Sachs has made a good case that the supply and demand dynamic is very, very much favoring the fact that the supplies are going to be shorter than the demand, because these oil companies have put all their money into paying dividends, buyback stock, issuing debt to repay other debt. They're not putting the money into exploration and creation of more oil. So based on that idea and the fact that the prices are, like Leslie was saying, Schlumberger, Devon Energy, Halliburton, they are starting to get some boat legs a little bit here. Is Q4 going to be a very exciting energy fourth quarter, Simon, or that's not on your radar too much? Or?
Not really on my radar.
Because in Europe, supposedly natural gas prices are just going nuts. And of course, Brent crude is going up quite a bit as well. But that's not right there. Leslie, any opinion on energy?
Well, yeah, my trading is based in patterns, specific patterns.
Okay.
And what I do know over the years of using these specific patterns, they're AB equals CD patterns, Gartley patterns, butterfly patterns. What I do know is that when you start to see multiple patterns of the same type of pattern forming on related stocks, such as in the energy sector that I'm seeing right now, that is it's almost like an indicator, without being able to put that on the chart, that something is ready to move within that sector. So again, I went in, the ones that I picked, the Schlumberger, SLB, Halliburton, XLE, those all had just very, very similar patterns. And then some other internal things that I look at for possibly looking for, is this really ready to kind of move, were present as well. So, I'm
But
not much into.
David, you want to throw up a couple of ideas here? Because frankly, there is something kind of brewing there, whether it's going to turn into a bad tasting thing or not. But it does seem like it's so SLB, for instance, just to get an idea, or XLE.
Well, you can see if you look at this chart right here, if we go
Mhm.
back like 3 days where that big red bar was, that
Mhm.
was actually the completion of the Gartley buy pattern. So
Mhm.
these types of buy patterns have very favorable risk rewards. And the Gartley buy pattern is an A, a B, and then you have a little retracement up, and then the leg CD is it will test a recent higher low. In this case, the pattern was testing the recent low from late August. And so you can identify these patterns in advance and then calculate your entry risk reward and then also potential targets. Right now, I'd be looking to see if it can, clear the last high from late August as well. If it clears that, then it probably can get a nice retracement using the high from June down to the low in July. So, first things first, let's see
Yeah,
if it
sure.
can clear the resistance,
Yeah.
short-term resistance area there. But
And this
yeah,
this is an exploration company more. If you put up XLE, you get some of the more major firms, and that actually looks a little bit better technically, doesn't it?
it does a little bit stronger. You have a little bit higher low on that,
Yeah.
but you still have a very prominent ABCD Gartley buy pattern
Yeah.
on that.
Yeah.
And now it's moved up from the last low from the last 3 days, which is where the entry point was on
Right.
that pattern. But it does look stronger because of the price position. Then you have the RSI on there. So the RSI is actually looks like it's in the process of changing from the bearish to bullish zone.
Yeah, no, I thought this was the best chart on the board as far as some of the energy. And the XOP is obviously a basket of the exploration ones, and that looks a little
That's
bit
very
better as
strong.
well.
Yeah.
So,
Yeah.
maybe Schlumberger is playing a little bit more of a catch-up game, but the basket of them, which is this thing, and the most aggressive one is OIH. Let's see what
Mhm.
that looks like, because that, when it gets going, doesn't take prisoners, huh?
Yeah, that also had the ABCD Gartley buy pattern
Mhm.
on it. And that, they had a nice higher low on it. A lot of these are also looking like inverse head and shoulder formation.
Yeah. Like I say, the analyst over at Goldman is looking for a potential very spiky move in Q4 because, again, the oil companies have been doing everything but looking for oil with the extra money they have. And so, they think that the demand versus the supplies dynamic could be very attractive. In fact, they think a lot of the commodities still have a demand dynamic that is still favorable. So it's going to be interesting to see how that works out. All right. Well, right now, and Sonny, did you have anything on energy?
Well, I agree with Leslie on this. It does look like an inverse head and shoulders, but it also looks kind of like a strange head and shoulders with the left side being higher than the right side.
Mm-hmm.
And it still looks to me like that's going to test the downside.
Yeah. So you'd be looking for more confirmation on these prices before you would throw the bullish towel in there.
Yeah, and I'm kind of like John Bollinger constantly talking about his Bollinger Bands. Well, my Sunny Bands will tell me exactly when to get in and out of that.
Yeah.
So I'm not really waiting for anything but confirmation from the Sunny Bands.
How much more strength, or what would you need to see for Sunny Bands to put the green light on?
What's the symbol again? I can't
Let's
read it.
try XLE to start out with that one.
XLE. Hang on one second while it comes up.
Sure.
Studies. What do we have? It's going to take me a while to get this on the chart. So why don't we ask that one on the next one?
Okay. With regards to Simon, why don't you go into a little bit about, some of the methodologies that you're trying to use on all the different time frames? Because, you say you do short-term swing trading and long-term. Do you have any base indicators or some kind of a methodology that you can kind of briefly discuss?
Yeah, I use price. That's it.
Okay.
Price. And what I do is I analyze the market using three things. The first thing I look at is trend. Okay, so I'm looking at trend using the pivots, using pivot analysis on the candlesticks. So I want to see what trend I'm in, if the uptrend's broken. And again, we picked in the trading room the market top last year in March when it went down. We also picked the bottom as well. And that was on a break of trend on both the top and the bottom.
And that was focusing on pivot as opposed to a moving average or anything like that.
No, don't use moving. I used to use moving averages right at the beginning. I got rid of indicators a long time ago.
Okay.
I don't use any. I mean, there's only one indicator of my chart is a CCI, and that's for basically to help. I don't really need it. It's like a stabilizer if you're riding a bike. It just gives me an extra indication when I'm trading in tight range markets and bases. So I've noticed certain patterns that form on the CCI that can give me an extra edge when trading bases. So I can know ahead of time. So I've been working on this training for a long time.
Sure.
When the market's going to go into when the market is, many people know afterwards, okay, the market's basing, but wouldn't it be a good idea to know beforehand, before the market gets into a base, what the probabilities are right now that the market's going to enter into a choppy sideways market, so you can trade accordingly, not when you're already in it. And then understanding, using, I use the same. I use supply and demand. I use trend using pivot analysis, and something that I call price direction, which is basically anything you want to learn on Japanese candlestick charts, you can replace with price directional analysis. And it's very, very simple, very easy, and you can replace everything else you ever learn about candlesticks with that. So those are the three things that I look at on multiple time frames. So I have a view of what's going on.
Sure.
And sometimes it's a top-down approach. The larger timeframes will cause the smaller timeframes to play out in that direction. For example, like the trend at the moment on the E-minis, on the weekly chart is still up, on the monthly chart still up. So, but it's not on the daily chart. But at some point when it gets to a certain level, the uptrend on the weekly chart will probably continue. How would I know that? Well, I'll see the downward move on the daily chart most likely end. And I'll know, okay, the trend's going to continue now on the weekly chart to the upside. But until then, you go with what's going on the daily chart. At the moment, it's moving to the downside, so moves up a sellable for now, small time frame, until that stops. And when you get to an area where the trend could pick up on the weekly chart, which it could be where we are now, it's in weekly demand, but I think it's going to go down a bit more. First, but then I'm looking for signs of trend. So I'm looking for levels of supply and demand. I'm looking at trend and breaks of trend in those areas, and I'm looking at what direction price is moving in. If you can imagine, the analogy of price direction is very simple. Imagine you're in a hotel, and how many of us have gone? We're on the 10th floor, and we want to go up to the 15th floor, and you don't the elevator or the lift comes to your floor, the doors open, and you get in, and it goes in the opposite direction. How many of us have done that before? We go in.
It's happened. It's happened.
We didn't notice which way the arrow.
Yeah, you didn't notice the button. You didn't notice the button.
We didn't notice the button. Wait. So basically, what you want to do is, if you want to go up, you want to make sure you get in the lift when the arrow is pointing up.
Right.
Otherwise, you might go down first. You may go up afterwards, but that's not what you want to do if you're timing the market. You don't want to sit through those big moves down all the way down to the bottom of the building until you go all the way back up again, which you're going to have to do if you get in at the wrong time.
Sure. So
that's what I call price direction. You want to time entries and get in when the direction's going in the direction you want to go in. So that if the direction of the market's up, you want to be on the buy side. And I know exactly when it changes direction from down to up.
And that's that's where your pivot points come in.
They're two different things. They could coincide together, but I could get a direction change without having a pivot.
Okay.
Sometimes they happen at the same time. They're two different things. So just imagine this scenario. Imagine the market's in an uptrend. Let's go through this on the daily chart. We're in a daily uptrend. The market pulls back to a daily demand area. That pullback on an hourly chart is a downtrend. That downtrend ends in the daily demand. not only does the downtrend end, the direction changes to the upside, price direction. Wouldn't that be a great place to get in? You're in the right location, you're in the right trend, and the trend on the smaller timeframes just ended.
Right.
So
And
that's why
that's why using the timeframes in concert is helpful.
Correct. I use all the timeframes, and this is why I can see what's going on. So if I, for example, gold a number of years ago was basing, and then it kind of pivoted inside the base and then broke above. So I know that when that happens, the odds of it breaking above are over 90%. It's going to break. So I play the base instead of the breakout. I play it in the base before it breaks up, and that was a massive move to the upside. And this was again that was happening. That pattern was happening on the monthly chart. It's the same things. It's like fractals. It works on all time frames. But when you see it happening on the bigger charts, then you're going to have a bigger move. It's and when you get confluence across all the time frames, you get even bigger moves. When the smaller time frames, you can imagine the long-term traders, what they're doing, they're going on the buy side, for example. But the short-term traders or the medium-term traders are also for their reasons on their time frames that they're looking at, plus also the short. When everything matches up, you get some of the most explosive moves happening from those levels.
Sure.
So that's basically what I look at. I don't need to,
and I think, like I said, there's a lot
know,
behind your curtain there. So that's why it's very important for people to get in touch with you to get the complete story. You know what I mean?
Yeah. I mean, it's very simple.
Yeah.
But it is involved. You have to, it's a skill like anything else. And you have to focus on it and practice it and get good at it. And then you'll see the market will, if you read the market correctly, and you trade in a line instead of trade. See, I'm more market-based and strategy-based. And I just want to explain that because it's very important. A lot of people who are beginner traders or maybe even trading for many years without success, what they're doing is focusing on strategies like this next best strategy and this strategy, and then this line crosses that line. What they're missing there is the kind of background, the environment in which they're trading in, as in the ability to read the market. A strategy is not going to work if you take the buy signal and the market's moving down, for example. So the market's moving down now. So don't take the buy strategy, for example. Look for the sell.
Right.
Yeah, it's going to be higher odds to play on the downside than on the upside, for example. You can still play on the upside, but they're going to be short corrections, for example, in the bigger move on the downside. So it's understanding the environment, or if you're in a sideways choppy market, understanding that, if you're trading a strategy that's a trending strategy, well, you're not going to be too successful with it because it's probably going to pull back.
You have to have the right tactic. Yeah.
Correct. So you have to adjust yourself to changing market conditions. So if you're strategy based, as opposed to market-based, then you're lacking, it's not going to work for you long-term.
Yeah.
You may have periods of time when it will work, when everything's matched up to the way you're trading, but when the market changes, the strategy is not going to work.
Right. Hey, Sonny, did you get a chance to pull up the energy stuff on the XLE?
I did indeed. Well, now where did it go? XLE. I was just looking at the S&P while you were doing that. And it looks to me like on the Sunny bands, it's about to bounce. Because I've got it touching the lower inner band. The DMA in the middle is going flat, so sideways. We call that sharply sideways. And it looks to me like it's going to go on up to, what's that line at? Well, it's about 55, 58, right in there, that zone.
Yeah.
1, 2, 3, 4. So it'll go back up to there and on up on the weekly chart to, let's say, 70. That's what it looks like to me.
Well, from your lips to God's ears is all I got to say.
And I really
that's my bias. That's my bias right now. But
I really like Simon's approach to the markets. Of course, that's totally mathematical. It's not indicators, it's not strategies, but it is the math of the market.
Yeah.
And I'm
like whatever market you're working with, if you're following the math, you'll probably be better off, right?
And I believe, I haven't done it yet, but for years I've been thinking of analyzing a piece of sheet music. It probably would have the same kind of trends.
Yeah. No, it's good. That's very good. And like I say, at the end of the broadcast, people can find out how to get a hold of you, Sonny, so that you can they can take advantage of some of the things that you can do for them. With regards to Leslie, like Simon went briefly over some of his methodologies. How about yourself jumping in here and give us a little bit of your methodologies as well?
Well, the pattern setups that I use are pure price. They're price based, and they don't use moving averages. I use RSI just to gauge the position of bullish or bearish with it. But Sunny is mentioning her bands are or sounds like close to triggering it. These patterns are these are already triggered, the buys in these stocks in the energy market from a few days ago. So they tend to get traders in at the earliest price points with the minimum amount of risk to them.
Mhm.
And then I do a lot of work and have over the years, and I've got some webinars on the CMT website, range trading versus trend trading. It is important that traders know that the market environment that they are working in and be able to identify when the market is going from an expansion to a contraction. The contraction phases are the ranges and the expansion phases are the trends. And there are definitely footprints to each one of those environments. And the basing type of formation, as Simon was mentioning, is just a classic technical analysis chart formation where the market can get very quiet in a sideways range for a long time. But that's a coiling type of a formation. It's the energy being stored within that coil, and eventually it's going to be released. So you go from your contraction out to your trending phase. It's very simple concepts that I use, simple pattern recognition that I use, like to keep things as simple as possible.
Mhm.
But be able to, I'm not a trader. I like to be in the earliest point possible
Mhm.
into the position with the smallest amount of risk, and then manage the trades from there. So that's what I teach. I teach traders how to do that. I've got some courses on my website,
Mhm.
and people can also work with me one-on-one if they like.
Yeah, you're trying to
Can I
get
interject
get
just a
involved in
sec?
things where your stop out point is not that far from your entry level. So
Right,
if you get into
exactly.
like an NVIDIA that's up at $230 times 4, because they just split 4 for 1, the stock is really well into the 800s, and it used to be in the 400 or 500s not that long ago. That is a hard one to put a stop in at any point, because there's a lot of real estate between the current price and really where the get out point would be, right?
Well, actually, no, NVIDIA there was one that I had on my weekly market setups that I do once a week, where I do, analyze the markets and
Mhm.
I show, specific trade setups. So that was one that I did back in March that had an ABCD Gartley buy pattern
Mhm.
on it right around the 200-ish level
Mhm.
from there. So now these patterns they're very interesting. It took me, a long time of my own study and combining with some classic technical analysis uh, to work these patterns successfully in the markets and to understand the structure of the patterns. But again, once you start seeing them right around that time when NVIDIA made that pattern, there were many other buy patterns
Mhm.
in semis that were being made. AMD is one. So,
The
they
whole
can give,
sector looked like it was going pretty good.
yeah, but
Yeah.
they give the optimal buy points in them with the lowest risk.
Yeah. But like I say, with NVIDIA hitting like 230, today went to 229, you would have to use a fairly short time frame to keep it on a short leash, because a longer time frame, you might have to give up $20 or $40 on the stock, right?
Well, it depends. It depends
Yeah.
on what your trade management is, which should be part of your trading plan.
Mhm.
That's the patterns are just patterns. It's the trade management that's the engine.
Mhm.
So the patterns aren't worth anything unless you have some form of a trade plan that includes your trade management and risk. So there's many ways to manage a trade. And so that kind of gets into a little bit more detailed
Mhm.
area.
Yeah, and you have information that people can get on how the different ways you see of managing a trade, right?
It gets into, the first is to learn the structure. Learn what it is you're going to trade. If you can't identify what it is you're trading in the markets, first you shouldn't be trading, but you should become an expert in that first. And then the trade plan and the trade management come in, and you have to have some form of testing with it. That's what helps build the confidence and consistency in trading.
Sure. Sonny, a little bit more about some of the, you've mentioned your Sonny bands, and of course, I think, was it a moving average, a DMA or something like that?
Yeah, it's a dynamic moving average. I found in my early trading years back in the 80s that whipsaw kills you. You can get a really nice trend and make a lot of money, and then you just give it all back in the whipsaw. So I set out to create formulas that would get rid of the whipsaw by smoothing the moving averages. And my DMA, dynamic moving average, calculates its own inputs based on the speed of the market. So NVDA went flat for several weeks there on a daily chart, and then popped up through a Fibonacci line, resistance line. And I'm glad you pointed that stock out. As soon as we get off the phone, I'm going to buy some.
Yeah.
The DMA is configured right now with gold on top, which is still a long signal. And it's about to break out to the upside on the sunny bands. And I wanted to say also, with regard to Simon's elevator analogy, if you stand and wait for the elevator to come back to you, it takes exactly the same amount of time as riding it up in the first place.
That's a good point. Is there anything else, Simon, that you'd like to touch on as far as, well, I mean, is there any particular market? Let's see if there's any particular ideas that you'd like to share briefly, each three of you, before we close out. So Simon, do you have any specific ideas that you'd just like to say you're focused on, or you're keeping an eye on? Any markets or whatever?
Yeah, I'm always watching the dollar through the dollar index. I think it's a very important market to watch, no matter what you're trading, to know what's happening with the dollar. So I'm watching to see.
You got a gut feeling on the dollar? We're about 92.60. We went as high as almost 94, and
yeah, it's not really a gut feeling. Again, based on the analysis.
I mean,
I'm trading what's happening, not what I think's happening, or what's actually happening.
Sure.
And I kind of like to keep my finger on the pulse of the market through the analysis. So if something doesn't happen I expect to happen, it sends an alarm bell off and think, oh, something else is happening. So I don't need to, again, it's not about being right or wrong in the market. It's about analyzing what's going on. And it's more like, if the market does this, then this is what's likely to happen next. And if the market does something else, then this is what's likely, and these are the probabilities. So then we just trade the probabilities, and we wait for the market to tell us what it's going to do, which is what I go back to
on the dollar
ability
index,
to read the market.
Is there a little bit of an important line in the sand that you're kind of looking at on the dollar index?
So there's an important level, I guess. I'm looking on the monthly chart, like 94, say 74, spot 742. So if it goes above 94.75 and stays above there, then it's likely going back to 100 again.
Okay.
And that would be very, very important for commodities and for the stock market as a whole. What's happening with the dollar index?
And
if
European
the market
stocks
turns
as well,
everything. So a lot of markets are correlated to what's happening with the dollar.
Yeah.
So it can give you an extra edge. And again, that's a hot tip, I guess, for anyone who's new to trading. Watch what the dollar's doing and see how markets are reacting to what the dollar's doing.
Yeah. Leslie, how do you feel about anything specific? We did talk about energy. Would you say that's probably one of the ones that are kind of on your radar right now?
I think a lot of these are still, they may need maybe a bit of a pullback based on the patterns that I use, risk reward with it. But yeah, I think they've got higher. They look like they've got higher to go on them. Apple is a chart that had beautiful pattern with kind of forming a range from actually last September, and from about the high, I think, of last September or late August, and then the lows of that September. You can draw a trend line up, so there's kind of another upward trending parallel channel with that. And within that, channel, there was a projection that I had to 157-ish as the
Mhm.
high. And with that, there were a lot of sell patterns that were forming. And so the 157 traded a couple of days ago, and it got, good move to the downside. It's almost down to about the center of where I have my range drawn. So it's not a great selling position right here, but I think a retracement trade back up on Apple will offer a short on that. And I
Okay.
think that if it breaks below about 146-ish, then we can see it down around maybe the mid 130s.
Yeah, because Apple
Below
sometimes gives
130.
you 20 to 30% corrections out of the blue and gives you quite a nice opportunity.
Yeah, so there were a number of sell patterns that formed on Apple.
And maybe you're saying it might go from like the 158 area ballpark onto this drop, then a rally, but don't take out 158. And then the next time through 150 would be the more serious drop.
Well, the high was 157.04. That was
Yeah.
the upside target where the patterns were completing. So it's
Mhm.
already started to get a move to the downside from the sell patterns.
Sure.
So it's not in the sell position right now unless
No.
you're already in it. But
Yeah.
a retracement between the 157.04 and where a turn starts back to the upside, I would be
Right.
looking for a retracement pattern for that could offer another entry into a short position.
Sure. Well, let's go around the horn here and make sure people know how to get a hold of you, because you have so much information to offer, and obviously from different angles. So that's really what makes a great meeting here, where you have people with lots of information, but different approaches. So Sonny, let's start out with you. How can people get a hold of you? And then what kind of special offer? I know you got that free newsletter on Sunday nights. That's a no-brainer right off the bat, but what else can you give us? Yeah.
Yeah, the cool thing about the newsletter is that it's free and it has lots of charts, analyses of bonds and stocks and the Dow and the E-mini and lots of things in there, Bitcoin, and it's all done with Sunny Bands and my DMA. So all that analysis is free, and I'm not going to charge for it probably ever. So might as well take advantage of free, I guess,
And get a taste of your approach too.
get a taste of my approach. That's right. And what else do I have? Oh, just go to moneymentor.com. If you go to moneymentor.com, right at the top, it gives my phone number. So, I mean, and its email is sunny@moneymentor.com. So,
And that's also how they could get the Sunday night deal, is by going to moneymentor.com.
Correct. And I always say education is not expensive. Lack of education is.
Absolutely. Leslie, best way to get a hold of you, and if you want to send out that invitation to the Denver Trading Group meeting as well.
Yeah, please just come to my website at tradingliveonline.com, and you'll see the courses and the one-on-one training that I have available. If you'd like the pattern recognition, I have sort of a kick the tires type of a course. It's a 3.5 hour course, Introduction to Trading with Pattern Recognition. It has quite a bit of information, and that you'll learn the pattern structures, a lot of little nuances, but you'll know if that is something that you would want to proceed with to study. So instead of investing in a lot of money in a course and you go, oh, this is not for me, this gives you a way to sort of kick the tires with it. And then also I help traders. I got my one-on-one trade tracks, and traders can sign up for one-on-one coaching sessions with me, and I'm happy to help them. They can just let me know what area they want to work on, and I can kind of create a coaching session just for them.
Sure.
But you can check out all the courses on my website.
Absolutely. And Simon, you've got a lot of great information, including that 3-prong approach where you are trying to, obviously do your analysis, but there's a lot more behind the curtain. So how can people get a hold of you and become more acquainted with your situation?
Sure, you can go to my website. It's tradesmartforex.com with the number 4. So it's TARDESMART, the number 4, x.com. And on the main page, you can see that there's a link to a YouTube channel. You can go and watch some videos on YouTube. Again, everything's free there. You can go into education, maybe read the blog, and I have also some free educational videos you can watch and get a taste of it. And if you put your email details in on the front page, you'll be sent to a page that will give you a 15-minute video, which will show you how to go about building a profitable trading strategy in 15 minutes. So I think that would be a place to start to see if this is for you. And if you want to get rid of indicators and just focus on price, then this is probably for you. If you've tried everything else and it's not working for you, then try this. I usually get, as I said before, many people, this is their last stop shop before they give up in trading full stop, because nothing else has ever worked for them. And ultimately we get good success.
Okay. Well, thank you all for being here, Leslie, Simon, and Sunny, because again, you guys bring a lot to the table for these for the listeners to pick up on. And again, we encourage you to go to their websites and get the details so they can give you a hand with your trading activity. For optionprofessor.com, we do have a weekly newsletter as well. And it's optionprofessor.com. You put your email in and you get it each week. David, I'm going to send it back to you. Again, thank you, Simon, Leslie, and Sunny for being here. I've enjoyed it. I think we've offered quite a bit of information. So thank you guys. And I'm back to David.
Thank
All right,
you.
thanks
Thank
everyone.
you.
Yeah, covered a lot of info today, a lot of topics. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. And you can also just go to TimingResearch.com to get access to this show as soon as I can get it posted, as well as any of the archives of any of the past events or shows. And just want to thank my guests again for today. Leslie Jouflas of TradingLiveOnline.com, Simon Klein of TradeSmartForex.com, Sunny Harris of MoneyMentor.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank
Thank you.
Thanks, David. Thanks, everyone.